this. And obviously that bids came in right off of that price level, and we've had a nice buy-side response. So we can add that measured move story to the charts, can't we? We can start building out that idea so that when we do bid, we're bidding from a strong position, aren't we? We're bidding from a position that we knew there was going to be profit takers by the sellers. We knew there was going to be a bid in there by the dealers, because there's now a significant difference. And this is what I was talking to the guys about this morning, about the dealers coming upstairs. Again, those floor traders, asking them the question, how do you know what price to start dealing at in terms of like a martingale? And a lot of people don't think the dealers ever did martingales because they think it's some sort of a gambling fallacy that the dealers ever did things like that. The dealers did martingales, of course they did. The dealers would bid 5 here, for example. They'd bid 10 here. They'd bid 20 here. They'd bid 50 here. It's the Buzzies. Buzzy actually even mentions it as his trading narrative discussed, is the idea that the dealers, of course they did martingales. Of course they martingaled all the way through this process. The idea of martingale is not alien to the markets in any way, shape or form. The bigger the value, the bigger the trade we put on. That value might be at lower prices, it also might be at higher prices. So the idea, of course, is that the more buying that comes in, the better the opportunity. And obviously that's something we start paying attention to as the price drives down into those areas. But when we ask the dealers, how do you know what price it is? I was talking to the guys about this morning. We've discussed this before. The idea that when the dealers came upstairs, I says, what was it you had scribbled on the back of your cards, the actual chips that you had on the floor? And the answers varied. Somebody said one thing, somebody said the other, but some of the common ideas was obviously the idea behind the point and figure charts. Now, they didn't draw a point and figure chart, guys. If the price of, for example, equities was at 96, that's their starting point. If the price drops below 96, that's fair enough. But if the price goes above 96, they just trade. They trade. They're not drawing in boxes or anything like that. If the price reaches a high print of about 0.6, they stop their chart, right? They stop their charts. So if the price here was 96, and then the selling came in at 0.6, they would then draw a little thing like that on their screens. They didn't draw all the candles and all the prices in between. They just drew in where the bid bottom edge was and where the offer top edge was. Why? Because they need to know that information. They need to know that the offer came in at 60s. They need to know that the bid was in at 96s. So obviously when you look at that chart, you say, well, what happened next? You says, well, if the idea was that this is a 10-point move, which is, we've discussed this many times, the S&P's trade idea is usually a 10-point move. We've discussed it many, many, many times from the outside market perspective. And I said to you guys, right, well, based on that, where's the bids going to come in? 86s. Yes? So you're automatically thinking to yourself, right, I'm going to start bidding 86s. So you obviously come into your price levels here and say, right, as soon as it hits 86, I'm going to start launching an attack at this trade. If it hits 84, I'm going to add even bigger size. And if it's 82, I'm right in full pelt into this bit of business, right? And obviously what happens is that the selling comes in and it becomes almost this point and figure chart where the selling comes in and it drives a single price wedge through the 86s down into this area here, and that's when the buying comes in. Well, that's exactly what happened. Exactly what happened. The high price was 0.6s. It was actually just above it. It was actually nearer 0.8s. The low price was 96s. So it was actually 0.8s to 96s. But let's 0.6, 96, 10 points, 86, 84s. So we know the big buy trade is going to be around about 84 print, right? Everybody knows the big buy trade is going to be about 84 print. And obviously between 86 and 84, that's where the buy trade on the S&P came in. As if by magic, not really. It's just what you would have expected at that point in the screens. It's not a surprise. It doesn't catch you out. It's simply what you would have expected with a value bullish. And you can start buying off that price. It really is simple stuff, isn't it, when you think about it? The idea of getting your the values lined up, the idea of leaning against those value narratives, the idea of just taking advantage of the short-term and the long-term ideas, the idea of adding some market internals to help you with the story. And the internals were helping you with the story as well, not just the values. But the internals were actually telling you into that bottom edge there that that's exactly what you probably should be doing into that print after that bracket level was put in here. So once that bracket was put in, the internals were a little bit bearish, but they've never been bearish since then, really, have they? And that gave you a couple of real strong clues that this was going to finish off. Now, this is a little bracket, as a measure, gave you the identical price. So there's the bottom of the bracket, there's the high of the bracket there. It gave you an identical price idea, didn't it? You start saying to yourself, damn it, I know exactly where this buy is going to come in. You've taken it from about 86 to 84s down to about 83s. You now know exactly where the buy is going to come in for the exit of the sellers. If this doesn't make any lower lows, they're all going to take profits, right? Because there's no new sellers at these lower prices. They're all going to take profits. Now, worst case scenario is that's going to give you a bracket measure on this. It's going to give you a little bracket trade, and you're going to make some monies. Now that the value is going bullish, you start thinking to yourself, right, I'm ready to deal. I want to do what? If you were Charlie, what would you be wanting to do? Lowball the price now. So you'd be trying to lowball the S&P into this area here by shouting it down, by calling it down into those areas and trying to get the best possible price for the long trade. So you start watching the S&P for that low ball and you start seeing whether they're going to try and do it. And at the moment, they're not. You can see they're not quite doing any kind of low ball attempt at this point. They did the low ball here and they managed to find a buyer and a seller, and they managed to bring the price up from the low ball, but they haven't really tried to do any more than this candle here. And that candle, they've managed to find some sellers and they've taken the price up. And you can see this idea is unfolding on the screens as you trade away from these areas. So it is just about understanding the basics of trading. It's about understanding the basics of how you see the stories unfold. Now look at that high ball that they did on the bond on the euro. See how they've sold away the euro after we told you about it? Why did they sell away the euro? Why were they so successful in selling away the euro? Because they got a massive surge of buyers. Who are those buyers? Probably all the aggressive sellers getting stopped out. So that gave you this idea that high ball brought in an awful lot of buyers, giving the big boys, the big dogs, a great opportunity to sell euros at 111.40s. See it? 111.40s, 111.30s, 111.50s area. A very, very good opportunity to sell into the high ball trade. So when you see it, the question is why? Why are they trying to get the low ball? Why did they try and bring the S&P down? Because they're massively bullish. Look at what's happened to the S&P. The S&P has just rallied right off of that trade. They didn't manage to low ball it, probably because it was too obvious. Everybody was buying the S&P 86s, right? It's too obvious. Everybody was long the S&P. It is what it is.